Hello and welcome to the Lending Mag video. And today's article is titled Finance Editor Not Impressed with Peer-to-Peer Lending's Impact on the Market. And we are focusing on an article from The Economist. The article reads, the audio you will find below is from a Financial World Highlights segment produced by The Economist website. The series is titled Money Talks. Edward McBride is being interviewed. He's the Economist finance editor, and at the 3:20 mark of the video, he answers questions about the peer-to-peer lending market and its rise in popularity. Mind you, this interview was held just prior to the wildly successful Lending Club IPO. They discuss how peer-to-peer lenders want to go around the big business banks and directly link investors to borrowers. And then we have our Lending Mag editor's note. It says Mr. McBride acknowledges that peer-to-peer lending is disruptive to the banks because it gives people a different way to do things, but he seems to slightly poo-poo peer-to-peer lending because it's relatively tiny, quote unquote, in the realm of finance today. We see this as a good thing because it shows the amazing growth potential of the peer-to-peer lending market. Mr. McBride openly admits that because peer-to-peer lending platforms are high-tech firms, they are data-driven and have much better software than the banks. Because of that, they are much better able to assess the risks of the lending that goes through their platform. In the interview, they discuss the fact that P2P lending is regulated, that they are not under the radar of regulators by any means, but the regulations are generally less strict on P2P lending platforms. Because if a peer-to-peer company fails, the end result is the investor losing their money, but nobody will lose their deposits and the state isn't called in to financially back the P2P company. That is not the case with the banks. So the regulators don't feel as much pressure to heavily regulate peer-to-peer lenders like they do with traditional banks backed by government money. Here are our article highlights. McBride says it's hard to know if the lower default claim of peer-to-peer lending platforms is true until borrowers are really stretched for money with a huge downturn in the economy. Peer-to-peer lending is so young, it's hard to know if they will have lower or higher default rates yet. McBride seemed to take a wait-and-see approach to the true impact peer-to-peer lending will have on the financial landscape. And, of course, we have the interview. If you would like to listen or watch this video interview, be sure to visit thelendingmag.com. That is all for today. Have a great day, everybody.